What's up, everyone? It's Eric from Option Edge, and today I'm coming at you with a trade in NVIDIA. Okay, let's take a look at NVIDIA. So they had earnings back in about 2 months ago in May, and since then, actually before then, we've had a major run to the upside. And I'm not sure exactly when the stock split was announced, but here's the stock split date: July 20th. So on July 20th, the stock will split to a 4-to-1 split. So this happened in Apple and Tesla last summer. So let's take a look at first Apple. This is Apple. Let's scroll back in time. Okay, here's the stock split in Apple. Okay, similar situation. Apple had earnings, and then the stock split was announced, and then made a massive run to the upside. Okay. Right at, let's see, August 31st was the day of the split. We went up a little higher, September 1st. Then the 2 days basically after the split, we saw this massive drop to the downside. This was about a 25% cut from the high here, okay? So that's what happened to Apple when it announced its split, and that's what happened right after the stock split, okay? Let's take a look at Tesla now, okay? Tesla, very similar situation. Earnings happened, then we went down a little bit, then we made the run when the stock split was announced around this time. Okay, stock was split on 31 August, and then we also saw same type situation, a massive move to the downside after the split, literally 1 day after the split. Okay, and this was actually almost a third of the price. We went from 500 to 330. Okay. So that was almost a 33% haircut right there off the top. Let's go back to NVDA. Okay. So my hypothesis is that we're going to see a very similar move in NVIDIA. We've had a massive move to the upside. And I think on July 20th, a few days after July 20th, we might see a move as large to the downside as Tesla and Apple. So if we do the math, let me pull out a calculator real quick. Okay, if we do the math, now I wanted to get this trade going back when the stock was just 3 days ago, the stock was trading at $833. Now it's at $800. Okay, if we let's say we have a 25% trim from 800, so I'll multiply that by 75% and see where the price is. So that would put us at 600, okay? 75% of 800 is 600, okay? So that would put us right, let's draw a line here. So yeah, we're looking at a big move down. And after such a run, this could be possible. So this is what I'm proposing. I'm proposing buying the $600 puts, and the expiry I chose was the October expiry. Okay. The reason why I did October is because it just gives us, we buy some more premium. And if we get a big IV spike after the stock drops, all that premium is going to be worth a lot more. So we'll get a fatter, juicier payout on the stock. Okay. Something else we have to keep in mind. So when this stock does its 4-to-1 split, all of the strike prices are going to be different because now the stock is $800. It's going to be a $200 stock. If you buy the $600 put, that's going to be priced at it's going to be like a $75 put or a $100 put. I'm not sure. So that's just something to keep in mind. Another risk that we're dealing with is after the split is announced. So after July 20th, the IV, the implied volatility, currently we're at a 42% IV rank, which is moderate for NVIDIA. So that IV is most likely after July 20th going to drop because the market is unsure. It's almost like an earnings event where running into earnings, you're going to get a increased IV. And then right after earnings, you get that vol crush and implied volatility decreases. So if you're owner of puts, or this applies to calls as well, if IV drops, those puts or calls that you bought will now be worth less, and therefore you'll lose money. So if you want to offset this, I was looking at the options chain. So this is the July 23rd. So like I said, the stock will split on the 20th. So if you wanted to play the IV rank, you could also sell a put at either $700 or maybe $750. It all depends what you think. I would do maybe more out of the money because if it does drop, we saw with Apple or with Tesla, literally like 2 days after they announced their split, they dropped significantly. But at the same time, I don't think in 2 days we'll see $100 move to the downside. It might take a week or two. So I think that would be a safe way to hedge your $600 puts. Let's take a look at the Robinhood options chain. So I already bought this put, and I'm actually down a bit. When I was first looking at these puts, they were $800, $8 a contract, and you can see they've gone up a lot since then. But my plan is, I think going forward into the next week, we got a little bit of that down movement. I think we're going to come up a little bit as we approach July 20th, and I think I will buy another put, another contract. So this is pretty expensive, $800 a contract. That's expensive for me. So I'm going to have 2 contracts on, and if we continue to move to the upside, I'm going to buy one more put right before earnings, and I may or may not hedge it. So let's also look at the profit loss diagram. So here it is. We have the $600 October 15th put, and here is the P&L graph. I have the blue line. It's set to August 11th, and the reason why I have that is because August 13th, right here, is earnings. 12th, is earnings. So I want to close my my spreads before the earnings, just because it's very risky holding contracts into earnings. Okay, so let's take a look. So we have this set to a day before earnings. So the plan is, if we don't see a move, if we see let's say we're still at $800, we're going to have a over 50% loss. So my criteria for closing this trade on the downside move, if the stock goes up and I lose money at 50%, I will close this for a loss. My other criteria is if I get 100% win, 100% gain, I will close one of my contracts and leave the other contract on to run more to the downside. So that's my plan. If we don't hit 50% on the downside and we don't hit 100% on the upside, I will close out before earnings. So that is my criteria for closing out of the trade. Okay. I'm trying to think, did I miss anything? Hold on. No, I don't think I missed anything. I'm pretty confident that we are definitely going to see a down move in NVIDIA, and this is pretty expensive for me. I'm going pretty long. These puts are pretty long for me. Or short, you're long a put, meaning you're short the stock, sort of. So yeah, I'm pretty confident that this is going to see a large move to the downside. So as always, this is not advice. This is just simply educational purposes only. If you do follow this trade, that's on your own. That's on you. And that's it. I hope you guys learned something from this, and I hope we see a good move. And one more thing. If we do see that big move to the downside, I'm going to take the profits I made on this trade and then invest in stock in NVIDIA, because it is basically one of the best companies to invest in. That's not advice, but that's just my opinion. So, alrighty, take care and have a good one.